Joining us now for some market strategy is Ken Kamen. He is president of Mercadian Asset Management, and still with us, of course, Mark Allswalt, of strategist with Monument Securities. Ken, thanks for joining us this morning. We've been mentioning, obviously, jobs, 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 jobs. That's what it's all about today. So what are your expectations there?
Well, I certainly see that, unemployment's going to be rising. I think the news would have been if it didn't rise. I think that we're seeing continued weakness, but like everything, it'll turn around. I know it sounds like the same old saw that you hear, but this has kind of been baked into the cake already.
What if it's worse than expected? I mean, when you start to talk about the whole green shoots theory and this economic recovery, you hear things like consumers are saving more, so that could crimp a recovery as well. What are your thoughts on that front?
Yeah, well, that's absolutely true. I think that that's one of the reasons that investors are playing it close to the vest now. I mean, we've had a nice bounce back in the market, but I think we're going to be in a sideways pattern for exactly the reason you just brought up. That, we're somewhat optimistic that we're seeing the world not ending as everyone was fearful of, but that doesn't necessarily mean we're ready to skyrocket the other way. And people are being very cautious and kind of holding back a little bit. I mean, you start seeing things that about the states now. Look at California's situation. Jersey just raised taxes. I mean, it raises a very significant issue for investors, especially as they look through their bond portfolio or even their municipal bond portfolios. One of the things that we've been talking to clients about is the fact that you might not want to be undiversified, if you will, in your municipal bond portfolios by just owning a single state. It's long been dogma that whatever state you're in, for the most part, you buy the bonds there because they're double or triple tax-free. But in this environment, you might get a lot of value of diversifying, in multiple states, because we're seeing a lot of people go very far out to try to capture some yield. And, to your point, if we're not really turning the corner now, some of these problems could have very, very long legs, and having a diversified portfolio could really help out.
Mark, we've been taking viewer questions here all morning. Sharul writes in and says, what do you think of the recent run-up in commodities? What are the prospects for medium, long-term investors in commodities, energy, agriculture stocks?
I think one has to recognise that part of the run-up in commodities is to do with quantitative easing. That's released a lot of pressure and releases speculative money. The other part is to do with the weakness of the dollar. Nevertheless, I do see some durability, particularly in the food area, because I think world demand for food is going to keep on rising. We've probably not quite got the capacity. Oil, I would have thought, is going to be a lot more volatile. And there is a danger in things like raw materials for the Chinese sector that the Chinese buy too much, don't find that there is really sufficient pickup in the world economy and not enough at home, such that suddenly people worry about a bit of a glut appearing, or Chinese demand, which is good at the moment, starting to evaporate.
And, as we talk about propping up growth, Mark, in the second half of the year, and conditions are still looking pretty tight, do you expect currency battles to emerge? If so, which of them do you see most weakening against some of the majors?
There's currencies which should weaken, like the yen, above all, because the yen is doing a lot of damage to the Japanese economy. There are currencies which will be vulnerable, particularly to twists in sentiment about the stability of the financial sector. So amongst those would be things like the Australian dollar, to a lesser extent the Canadian dollar, the Brazilian real. There are currencies which are definitely vulnerable or have been put under a lot of pressure, like Sweden, because of fears about the Central and Eastern European banking sector. But I think there are things like, particularly like Sweden, I think there's more than enough in there at the moment in terms of risk. In places like Brazil, you have to say that even if there is a temporary souring of sentiment due to some risk aversion, it's still basically a solid long-term buy.
And speaking of risk, Ken, you were mentioning munis, but you take a look at what's happening in the state of California. There's got to be some risk involved with investing in munis in light of that situation as well, though, right?
Yeah, absolutely. I think that's why you want to start looking at a pretty diversified portfolio of municipal bonds and even corporate bonds. I mean, the challenge now for the investor is they're all searching for yield, and people are going very far out on that timeline to find some yield. But the problems and the crystal ball gets very fuzzy as you start going out. And as you look at the situation in California, it's kind of analogous in some ways to what's going on in the auto industry. If you look at GM and Chrysler, the big issue for them was these legacy costs. You know, how much into every vehicle was the cost of health care for retired workers. Well, municipalities around the country have that problem in spades, if you will. They have, you know, firemen, teachers, sanitation, police. Their legacy costs are ginormous compared to the car industry. So I think as taxpayers now have the ability to move around the way they might not have had in the past. When you think about it, look at a state like New Jersey. You had to live in New Jersey to be near a money center like Philadelphia or New York. But now with telecommuting, with people not necessarily needing to live near money centers, they don't have to stay in these states and pay very high taxes. They could move to the center of the country or to low tax states. What does that mean for the tax rolls of these states that are in these problems? And that's why I think it's very important for people to really think that through as they put together, you know, more of that long-term portfolio, not only just in bonds, but in equities when you look at different regions of the country.
Okay, well, you know what? We'll leave it there. Both of you will stay on. Ken Kamen, president of Mercadian Asset Management, and of course, Mark Oswald from strategist at Monument Securities, our guest host today. And we're going to cross over to